Palantir would need to soar by roughly 150% to reach a valuation of $1 trillion, a milestone that only a handful of companies in history have ever crossed. The company has already delivered a stretch of performance so extraordinary that it borders on myth-making. Its stock soared 167% during the year 2023 and has advanced roughly 120% so far in 2025. Very few companies ever experience multi-year periods where the stock doubles again and again, yet Palantir has done exactly that, defying nearly every conventional market expectation along the way. After witnessing this multi-year surge, it is no surprise that many investors continue to anticipate further upside over the next several years. Palantir's expansion has not merely been strong, it has been historic. A growing number of analysts have begun speculating that the company could eventually reach or even exceed a $1 trillion valuation. Palantir's artificial intelligence-powered data analytics ecosystem began with a singular mission focused entirely on government work. Over time, however, the company expanded its focus into the commercial world, and the response has been overwhelmingly positive, giving Palantir two powerful revenue engines running in parallel. Government contracts still make up Palantir's largest revenue segment, yet the commercial side of the business has been expanding at a faster pace. In quarter 3, commercial revenue increased at a 73% rate, reaching $548 million, while government revenue advanced 55% to $633 million. For a company already operating at a massive scale, growth rates like these are remarkable. Much of this acceleration can be traced back to the artificial intelligence platform, a suite of tools that allows users to embed generative artificial intelligence deeply into workflows. This integration enables complete automation of certain tasks and partial automation of others, creating dramatic productivity gains for organizations that deploy it effectively. Despite its momentum, Palantir still works with a relatively limited number of commercial clients, counting only 530 customers in the United States commercial space. That small customer base underscores a powerful truth: enormous room for expansion remains. This combination of rapid growth, technological leadership, and a vast untapped market fuels investor excitement. Palantir operates at the center of one of the most transformative technological movements in human history, where artificial intelligence is reshaping industries, governments, and global infrastructure. For many, investing in Palantir feels like investing in a foundational pillar of the artificial intelligence revolution. Even with all that potential, the challenge is not identifying Palantir's strengths, it is evaluating whether its current valuation demands growth levels that are realistically achievable. Over the past 12 months, the company generated $3.89 billion in revenue. In the most recent quarter, revenue increased 63%, while net income margin reached 40%, an impressive profitability level for a company aggressively expanding its software adoption worldwide. If we assume that Palantir could maintain a 60% growth rate and sustain a 40% profit margin through the end of the year 2030, its revenue would reach $40.8 billion each year, while profits would rise to $16.3 billion. Those numbers would be jaw-dropping if achieved, yet they represent only one part of the valuation process. The next step is determining an appropriate earnings multiple. Presently, Palantir trades at 109 times sales and 229 times forward earnings. These valuation levels are extraordinarily high and rarely sustained for prolonged periods. They are typically reserved for companies whose revenue doubles or even triples in a single year, so describing Palantir as expensive might be understating the situation. Even the fastest growing companies in history have struggled to justify similar valuation extremes. For comparison, Nvidia, one of the most dominant and influential companies of the artificial intelligence era, trades at roughly 45 times trailing earnings. Using that figure as a reasonable long-term valuation benchmark puts Palantir into clearer context. If Palantir grows at 60% each year for 5 consecutive years, reaches a 40% profit margin, and ultimately trades at a 45 times trailing earnings multiple, the company's valuation would land around $733 billion. With the stock currently valued at roughly $395 billion and priced at $165, that optimistic scenario would push Palantir's stock price to approximately $306. Although that increase represents strong upside, it equates to an 85% gain with a compound annual growth rate of 13%. That is slightly above historical market averages, but does not reflect the type of expansion necessary to cross the $1 trillion threshold within the next few years. Yet, the mathematical reality of its valuation makes the path to $1 trillion trillion, far more demanding than many realize. Analysts expect Palantir to grow about 40% next year. If the company falls short of that forecast, the stock could underperform the broader market over the next 5 years, assuming the market grows around 10% annually. Even if Palantir hits its growth targets, its valuation may still struggle to expand meaningfully unless the company delivers a string of extraordinary performance years. This raises a crucial question. Is the optimism surrounding Palantir justified, or is the market pricing in perfection? Investors remain divided. On one hand, supporters argue that Palantir is still early in its artificial intelligence journey and could eventually dominate critical sectors of the global data ecosystem. They point to major government contracts, strong commercial interest, and the potential for industry-wide automation as reasons why the company could expand far beyond current expectations. On the other hand, more cautious investors highlight the enormous growth required to support Palantir's valuation. They argue that exceptional performance must continue for many years, with little room for error in order for Palantir to justify its price today. Yet enthusiasm persists. Many analysts and investors believe Palantir could still rise 150% and become a $1 trillion company, especially if artificial intelligence adoption accelerates globally. Whether that happens remains uncertain, but the debate itself reflects just how central Palantir has become to discussions about the future of technology, data, and artificial intelligence infrastructure. The company sits at the intersection of national security, enterprise transformation, and the rapidly expanding world of generative artificial intelligence. Those forces together create one of the most powerful narratives in the modern stock market. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.